Welcome to the daily briefing from interest.co.nz. I'm David Chaston. Firstly today we look at October food prices, then we'll check what has been happening recently with wholesale electricity prices, and we'll look at the latest readings on the tourism industry, then we'll wrap up with what the other media are reporting. For the year to October, food prices rose 3.6%. Food prices are putting real upward pressure on our inflation rate. There were higher prices for grocery food, up 4.7%, meat, poultry and fish, up 5.6%, and restaurant meals and ready-to-eat food, up 3.7%. The less significant upward pressure came from higher prices for non-alcoholic beverages, which were up 3.6%. The only lower prices came from fruit and vegetables, which were down 1.6% year on year. What we are seeing in the month-on-month changes, however, are sharp rises from dairy products, especially butter and cheeses. Although this is not really surprising, the level of increases might be. Butter went up 23% in October from September, and cheeses were up 7%. If local consumers don't pay close to the international price, then exporters will shift supply to their international customers. Around the world, food price rises are causing angst, and it's not only dairy products that are doing this. The whole shift of grains to fuels is making basic foodstuffs more expensive. The long downward trend in wholesale electricity pricing seems to have come to a quiet end. Prices had been declining steadily for the past 4 months, falling from about $75 per megawatt hour to about half that level. Driving that downward trend has been regular reliable weather conditions in the hydro lakes and storage levels that have been above normal during this period. This market has seen something quite different to the resource alarmists. But in the past few weeks, that price decline seems to have ended. Lake inflows have fallen to about 60% of normal, even though water storage is still high, just a few percent under the average for this time of year. Our lakes are well stocked for the summer period. Early November electricity demand has been high, running about 5% above the same period a year ago. Electricity generation has been pretty normal, although slightly down for North Island hydro. This has been made up by some higher non-hydro generation, but mostly by stronger South Island generation. There appears to have been a slowing of growth in the tourism industry. The September accommodation data is now out, and it shows that guest night growth slowed to about 4%, well down on the 6% growth for most of 2007. In September, guest nights were 5% higher in the North Island and 3% higher in the South Island. 11 of the 12 regions recorded more guest nights, with the Auckland region showing the largest increase. Backpackers and hostels had good growth, up 10% year on year, followed by caravan parks and camping grounds, up 7%. Motels were up 3% and hotels were up 2%. It certainly seems it is the premium end of the industry that is slowing the fastest. With retail funds inflow slowing, South Kent Refinance is going to the bond market to support its growth ambitions. It is planning to issue new bonds, which will be first-ranking, secured, 5-year term, fixed-rate securities. Interest will be payable at the higher of 10.25% per annum, or a margin of 225 basis points above the 5-year swap rate. It is interesting that it is proposing to pay at least 50 basis points more than it's currently offering retail investors. The gold price continues to push higher and is now well above $800 US. In the last day or so, traders have taken profits at this level, but there appears to be more upside to this price as the realities of the international credit crunch bite ever harder. You can get more news and stay up with Newsmaker Views on our news page. Join us again tomorrow for the freshest finance news on the web. We'll see you then.